Are you seeking 100% financing for real estate investment purchase and finding that it's not easy to find a lender for your deal? In this video, I'm going to explain the requirements for getting the highest possible leverage, the maximum loan to value, and how to find private mortgage lenders that can fund your property purchase. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers find direct, private hard money lending companies. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and get notified every time we release a new video. 100% financing is mostly used for real estate deals in which the property will be improved immediately after the purchase so that its value will increase before the end of the loan term. However, that's not what this video is about. In this video, we'll focus on a standard bridge loan for purchasing a property that does not require a renovation budget. I created a separate video to cover 100% financing for house flipping and another video for multifamily value-add deals. Now, before we get started, I have to clarify that private lending is only for investment real estate. It's not for buying a home that you're planning to live in. There is one exception in California, and I'll make a separate video about that. Another item to clarify is the type of lender. When I say private lender, I'm referring to professional private lending companies, also known as hard money lenders or bridge lenders. I'm not referring to private individual investors who lend out their own retirement funds. Hardly any private lending companies in the United States will consider 100% financing because it is extremely risky. If you don't put any money into a deal, you have nothing to lose, and therefore you may be more inclined to walk away from a property if things don't work out as planned. Contrary to what many people think about private lenders, professional private lending companies do not want to foreclose and take back the property. The foreclosure process is an absolute nightmare for lenders and is likely to result in a net loss for them. So their thinking is if you put down your own hard-earned cash into a deal, you're more likely to pay back the loan. Professional lenders want you to succeed so that you can do more deals and come back to them for financing those deals in the future. So what is the maximum loan to value? The max LTV for most short-term private mortgages is 70%, and a small number of lenders will go up to 75%. If you're buying vacant land, the maximum is 50% loan to value. Anything higher than that just doesn't make sense for a private lender. The only way to get 100% financing for the purchase of an investment property which will not be significantly improved during the loan term is with cross-collateralization. This means you need to have another investment property with a sufficient amount of equity to use instead of cash. So the lender would have a first position mortgage on the property being purchased, plus a first or a second mortgage on the property you already own. If the cross property is owned free and clear, meaning it doesn't have an existing mortgage, you can use up to 70% of that property's value for the purchase transaction. Not all private lenders offer this, and it may take a bit longer to close because the lender now has to do their due diligence on a second property. Not many lenders will consider a second position mortgage, but the ones that do will likely have higher pricing for it. If the cross property is in first position, the pricing would likely be the same as if you brought cash to the closing. The interest rates for most first position private mortgages range from 7% to 12%, with the average being around 9% nationally. For a second mortgage, the interest rates typically range from 10% to 15%. You may feel that this method of crossing another property being called 100% financing is a bit deceiving. However, this is how some lenders advertise that they offer 100% financing for a purchase bridge loan, and what they really mean is you can buy a property without a cash down payment. One other way to get higher leverage in purchase bridge loans is with a seller carryback. This means the seller would provide a second mortgage to fill the gap between the private lender's maximum LTV and the purchase price. While some private lenders are okay with this, they won't consider it when the borrower is not putting any of their own cash into the deal. So if a lender is willing to fund up to 70% of the purchase price, they may be okay with you putting 10% down, and the seller can finance the remaining 20% with a second mortgage. For residential property purchase, it will be nearly impossible to find a private lender willing to fund a second mortgage for a purchase. This is also known as gap funding. I've known some companies that offer this in the past, but they went out of business or they had to change their business model because it resulted in way too many foreclosures. In commercial real estate financing, there are some private lenders that offer second mortgages for a purchase, and they call it mezzanine financing or preferred equity. The minimum loan amount is typically $1 million, and the property investor will need to contribute 10 to 15% of the purchase price in cash. What if you're getting a great deal off market and buying way below the real value? Most private lenders will not take this into consideration. In private mortgage lending, the purchase price is the value. If you try to argue this with a private lender, the response will likely be that if they can fund 100% of the purchase price, they can just buy the property for themselves and be a real estate investor instead of a lender. I see a lot of real estate investors using the perceived value amount when they state the loan to value to a lender. But if you're buying a property and not adding any value to it during the loan term, a private lender will primarily focus on the purchase price. And many use the acronym LTP, which is short for loan to purchase price. If you're looking for a private or hard money lender, use our website privatelenderlink.com as a resource. There's no fee to search and no registration required. Many lender profiles will indicate whether the lender will cross-collateralize and if they allow a second mortgage behind their loan. I'll show you how to find these filters. When you select the loan type, there are 4 categories which include lenders that provide purchase bridge loans: private money, hard money, commercial bridge, and residential bridge. Private money and hard money have a mix of residential and commercial property lenders. Most of the lenders in the commercial bridge category have a minimum loan amount of $1 million. Next, enter a state or major metro area to see a list of lenders. Click on Refine Results to expose a few primary filters. One of them is LTP, but if you type 100 in this field, you won't get many results. Click on the Show Advanced Filters link to see many more filters, and the 2 which are relevant to this video's topic are Collateralize multiple properties and Allow junior mortgage. Select Yes, and then click the Apply button. View each lender's profile to learn about their guidelines, rates, fees, and much more. Look for the green contact button and reach out to the lender directly. If you found this video to be helpful, please click the like button, and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.